According to John Burns Real Estate Consulting, we have a bifurcated housing market. Out of the 150 markets that John Burns follows, 100 of those markets are below their peak, while 50 are at or above their peak in June. 24 of the original 100 are actually down more than 5%, led by cities like San Francisco, Santa Cruz, Seattle, Austin, Boise, Las Vegas, and Phoenix. Those range from a high of 10.5 in San Francisco to Boise at 8.1. On the other side, we have markets like Chicago that are down 0.1%, for example. This is what we're talking about. There were a lot of markets where iBuyers got focused. They distorted the market on the upside, and as they are exiting the market, they are distorting it on the downside. What I am curious about is markets like Sacramento or markets like Las Vegas. It appears that those markets are already healing. We got a note about Sacramento that the last 10 days, this came from Ryan Lundquist, Twitter handle Sacramento Appraisers. Pending homes, of the homes that went pending, 51.4% had multiple offers. Now, first, when I say multiple offers, do not think multiple offers like the summer, where people were 20, 30, 40, and even 50 grand over. These are multiple offer scenarios where many of the offers are actually below list price. But offers coming back nonetheless means buyers are coming back, and that is a good thing. Just for reference, Ryan highlighted again Sacramento at 51% of pendings had multiple offers, Placer at 39%, and YOLO, I guess, at 48%. Again, credit to Ryan Lundquist for this data. I don't know if you've heard, but the 30-year mortgage rate, folks, the 30-year mortgage rate officially broke 6%. We have not seen below 6% for quite some time. It was 5.99% as of yesterday. Again, it is hard for many to believe that the Fed raised interest rates 25 basis points, but mortgage rates come down. Really what is going on in the bond market is the bond market is saying that Jerome Powell, we don't believe you. Jerome Powell is trying to talk tough, but the bond market with the 10-year note falling below 3.4 has dragged mortgage rates below 6%. It officially happened on February 2nd. We started the week at 6.21%, just for reference. On top of this, we had Bank of England come out and give a 50 basis point increase. Again, the Fed just did 25. The B of E, Bank of England, is now at 4%. It is the highest since 2008 for Bank of England. It might be interesting to note that UK inflation is at 10.5% last reading. So Bank of England has some work to do to get ahead of inflation. Well, we had a bunch of tech earnings yesterday, and for the most part, they were all bad. Alphabet, aka Google, missed top line, missed bottom line. YouTube revenue missed. Cloud revenue missed. It was all kinds of bad. Amazon hit revenue, but missed and gave a weak forecast on earnings. Again, not good for Amazon. Apple actually had 5% year-on-year decline, the first decline in something like 11 or 12 years. The Apple drop was significant. It was kind of the last tech out there. The question with Apple, of course, is was this demand destroyed or demand delayed? A lot of hope is out there that these iPhones that were selling slowly were production issues and that demand is simply delayed, which will help in the upcoming quarters. We shall see. Apple did talk about, highlighting three issues. The strong dollar. We've heard CEOs talk about that, where the strong dollar or the currency hit. China production issues, which for the most part appear, according to Tim Cook, to be behind them. Or the macro economy, where people are simply delaying handset purchases. And again, Apple does not typically give guidance, and they have not given guidance since 2020, and that continues. On top of that, we had Qualcomm come out with a 12% drop in revenue and a forecasting more pain in the subsequent quarters. On top of that, we had Starbucks. Starbucks missed top line, missed bottom line, and really highlighted that China, once again, dragged down their performance. China is something we talked about with Starbucks, I believe, 6 quarters ago, and that Starbucks was the first indication that China consumers were retreating. It will be interesting to see what Starbucks does in the next quarter because they took the pandemic and opened a lot of stores in China. So the worst may be behind them, but you never know. And lastly, we had Ford. Ford Motors, or Ford, posted a horrible quarter and gave a really weak forecast. They estimated that they had execution issues to the tune of $2 billion. I don't know about you folks, but if my execution was off by $2 billion, I would no longer be employed. That is one hell of a job. So at the end of the day, folks, mortgage rates came down as expected. I expect them to average below 6%, which was one of our 12 crazy housing calls for the year. Some people now, including Barry Habib, are talking about 5% mortgage rates. Barry Habib is amazing. He's awesome. He has won the forecasting award many times. I don't see it. Barry does. I hope he's right. But yes, I certainly see below 6 and possibly to about 5.5. Barry thinks 5%. So again, remember folks, do the work. Get a buy box. Look at it every day. Understand average, and you too can write great deals. Folks, take care. Have fun. Bye-bye.